Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with my co-host, business partner, James Mason. James, how are you doing today?
Todd, I'm doing well today. How are you doing today?
Doing well.
Todd, I got one for you. Todd, are you ready for this?
I always.
All right.
Hold on. Newsflash, dad joke coming.
All right. Todd, what do you call a fish wearing a bow tie?
I don't know.
Sophisticated.
I like it.
All right. So everybody, good morning. Dow futures are currently up 248 points. S&P 500 is up 42 points. And the market is coming out nicely bullish, aka Jerome Powell buying up the market. He finally broke the bears' backs. Over the last 2 days, we've been watching the feature that we've created with our own data that people don't have anywhere else. We created our own data here. We've been watching them cover their $1.2 billion with a B short positions in SPX, and yesterday they fully covered right at the bell, and I was like, oh my God, guys. So I kind of updated everybody, letting everybody know, and lo and behold, sometimes it's hard to see when you have your own biasness in the market, and I'm still extremely bearish bias on the market. But in that moment, I just had to step back from my own biasness and think about, okay, you literally created this product to see what the whales are doing. This is what they're doing. You need to believe in it. And so I chose to let my biasness go and move with the whales. And sure enough, thank God I did, because the market has made a significant move up. Now, the big question is, will it hold? That's the $1 billion question that no one has the answer to, because technically this market should just be free falling. Like, we should be the SPY should be right around 400 or so, moving its way down to 370. But hey, when the Fed comes in and keeps buying every dip to hold the market up, eventually the bears get the point, and they give up. It's just too much of a fight. And here we are with this nice bounce, and we'll just have to take it from there. So, all right, Todd.
Hello, I'm Matthew Inman, also known as
You have some other stream.
Yeah, I was gonna pull up a Tom Petty's Free Falling song for you, but when you do that, you have to listen to an ad first. So, as much as it was a great idea, it didn't work out.
Yeah, but it's also a YouTube strike for us.
I know. I was going to just do it for 2.7 seconds. Anything under 4 seconds is not a strike. I looked it up.
Okay, thank you for justifying this. All right, so, man, viewership volume is low today. Good Lord. What's up with that?
Maybe they don't want to hear about scaling in. I gave them a little sneak peek in the newsletter, so they're like, oh, I know how to scale in. But we know that's not necessarily true.
Yeah, we know that is a bold-faced lie.
And the reason we know that is when we talk, the two of us, or even with the three of us in a group conversation, we're hearing the same messages from different people. And people are confused on what scaling in, even though we've got videos out there, we talk about it over and over. So we thought we'd have a short conversation this morning about what it means for us individually and how it works. And maybe you pick up a little nugget here to help you make it more successful in your trading. First thing I'm going to share with you is that there's a lot of ways to make money in the market. This what we're going to talk about is not way. James and I even trade differently. We trade some of the same stuff, but I think of myself as a scalper, quick. If a stock makes a move, spend only a few minutes, I'll take some profits. Where James will have a target price, and he'll sit on it for 8 hours waiting for it to move $3 and to nail it. That's hard for me to do. But I know who I am. but that's easier for him. So knowing who you are and how you trade, I think is first important.
So
Second
Todd,
thing is,
I hate to interrupt you right there, but let's start with, I'm going to break down every time I hear something that I know that people get confused on, I'm going to highlight it and address it. So right there where you just said, hypothetically, like I'll sit there for 8 hours to wait on $3. Guys, we have to use a little common sense here. We're not talking about $3 for the entire trade, the P&L. We're talking $3 a share. So when Todd says that, waiting for 60 cents per share.
correct.
Okay, go ahead.
Yeah, no, that's important because sometimes when I share my results, will be like, hey, we made $1.60 in profit, but that was times 1,000 shares. You're right.
Yeah, and I just like, I'm not trying to be condescending or belittle anybody. I'm just bringing this up because these are real questions.
Yeah, the real questions. So you have to understand who you are as a trader. So scaling in, real simple, is you're going to make an entry into a trade, and rarely will you make the perfect entry.
The Wells don't even make perfect entries. They actually don't really care because they have a lot of money to scale in with.
Correct. The best traders in the world, they try to pick the perfect entry. They look at resistance and support lines, but what they do is, so for example, they'll have a trade, and let's say that they want to put X amount of dollars in that trade. They will break that dollar volume into buying units, and so they may enter it at the first trade, but they may have 2, 3, 4, 5. Sometimes I even use the number 10. I'll break it into units of 10. To get into a trade, which allows them to average up or average down depending if they're going long or going short. And you have to understand that. The next thing you have to understand is that the time frame that you're going to scale in. Some of you scale in, like James made an example of a $400 stock. The stock moves 30 cents against you, which is nothing. But like, oh, I got to scale in. No, you're looking for like a $3, $4 move before you might be scaling in on that trade. So understanding to enter slowly and enter where to enter based on support and resistance lines is helpful for you, I believe.
Yeah, like, so Todd, how long ago was it when I used to do this stupid mentorship? I freaking hated that shit.
Almost 3 years ago.
Yeah, it's crazy. It's been a long time.
Yeah.
I started that up, and I remember I was like, I cannot wait to quit this. Literally.
Well, remember, you used to not scale in during the mentorships.
Yeah, and people just couldn't trade their account size.
Correct.
And that's why I literally had to start changing my trading style and scaling in to show them how it's done. Because I used to show my entire trade, like P&L, account, everything. And the first thing was, I enter into a position and then they enter into a position. And then if I had to add in more and scale in, okay, cool. No big deal. Or if I could cut it, I'd have a large position already in my entry. I could cut it. I could take that hit. Well, the other people couldn't, and they wouldn't. And so they were wrecking themselves. And when these trades were turned out to be successful trades, and, I was like, hey, how did everybody do? So many people just like, I lost my ass. I'm like, how did you lose? That was a winning trade. You guys literally watched me do the entire thing live without any delay, in a Zoom feed with me. And that used to blow my mind. So then I was like, okay, well, I'll start scaling in. So scaling in helped, but at the same time, I was just like, damn, like I can't show my position size because when I take 1,000 shares into something, and then I have another member taking 1,000 shares in it, and it's just not comparable because my account size was over $600,000 then. Their account size was like $5,000.
Yeah.
So you guys can see the huge disparity right there. And like they were trying to match my position size based off of their account size, and thinking that, oh wow, James has 1,000 shares in XYZ stock. I'm going to take that many because he's that confident. Like he's so confident to take 1,000 shares. Like that's my entire account size. And really, that was just me. Just like, yeah, whatever. If this goes against me, I'll buy 3,000 more shares. No big deal. And a lot of times that would happen because no matter what, you can't. More than likely, you're not. I can't say you can't, but more likely, you're not going to get the perfect entry or the perfect exit. Like Todd just said. So
that's why. So when you report, so let's talk about an example that you'll talk about. The whales are short 25 million on SPY. 25 million is not a lot of money. 25 million to in my world might be the equivalent of like 50 to a couple $100 to them, to the value of money that they're working with. So they're just taking a foothold into the trade.
Yeah, so like if you see a whale in any service or anything, or even just watching your own like options chain or just times and sales, make like a $25 million trade, like a purchase. That's not really like oh wow, this is ready to shift in that direction. That's nothing.
Let me show you a chart from a trade I did yesterday morning. CFVI.
Yeah. So let's see, John Stevenson's. You had a question. Your question is, speaking of scaling in, is there a newer scaling in video than the one I found last time I looked? No, but why would you? I'm not saying this to be rude or nothing, but like, why would you need a new video? It's nothing changes. All right, Todd, good.
All right, so this sticker was in the morning, around a little before 10 o'clock, and this is an example. I scaled in 8 times, and my first entry was around 1590, and my last entry was around 1640. Was the actually scale in 7 was a little bit higher than scale in 8, and I was basically using a pre-market high as a guideline, as a support and resistance line to get in. But I came in here at 1590. If this goes down and I win here, take a small trade, and it's a small win, and I'm good with that. But my first entries were 2, 4, up through about 1 through 6. The total shares equaled a starting position for me. So when I talk about breaking the trade into 10 units, trade 1 through trade 6 was the equivalent of a starting unit, because I went small. And then 7 and 8 equaled a half a unit. So I had about 1.5 units into my trade here. It was a decent size, but I mean, I had like 85% of my buying power that I planned for this trade still available to protect myself. And then after my final scale in, it's bouncing around, got the big red candle here. And I took a partial position there. Actually, I broke it into fourths, and I scaled out 1, 2, 3, 4, and I covered. I'm glad I did, because 5 minutes later, it was a 1 minute chart. 5 minutes later, it took off. It made things exciting right there.
Yeah. So like how Todd has shown you his chart right here. Guys, this is how Wall Street trades. This is how they scale in. I'm not saying that Todd is on Wall Street, even though he's a hedgy penny flipper. But
you guys watched the opening video. I mean, you see me on the floor.
That is true. That is true. So that's what they're doing. That's what the whales do on Wall Street. They find that range where they just kind of like, it's probably going to reverse here. I'm going to start, making my entry, and they could go 50 million into that trade, for whatever. Let's just say they're bearish. They could go 50 million. Cool. If it moves immediately in their direction, they're cool with that. They'll take their profits, and when they are ready to trade again or do whatever it is that they're going to do, what they'll do is, let's see, Jesse, yes, That is a bearish trade that he's showing. So, if they throw 50 million into a trade and then it goes against them, no big deal. They'll drop another 300 million on top of it. And if they have to, they'll drop another 100 million, 200 million. They can get into the billions, guys, because that's how they planned to trade. Now, once they start getting into the billions into a trade, then they're really freaking serious on that direction, going that way. So they can let it go against them. And like how Todd's chart is showing right here. And this is the thing with internet traders and all these YouTube gurus. They have screwed up. Honestly, they've screwed up the retail trading industry completely with their false knowledge. How they always try to show, okay, well, hold on, Todd, I'm going to share my chart now. So, for instance, right here, this is just SPY, and this is just hypothetical. They try to always show crap like, okay, guys, and you would want to make entry right here, breaking above this trend line, and we're going to have a super tight stop loss. We'll just say, okay, this trend line is 451.59, and we're going to have a stop loss in at 451.30, which that's too tight of a stop loss for something of this PPS value. But if you listen to their videos, that's the dumb stuff that they're always saying. They're always talking about, we need to have risk management here. And it's silly, they're talking, like a 30, 60, 30 to 60 cent or whatever pocket change for a stop loss on a massive blue chip. And then they're having this outlandish target price. So literally then they start to try to push these ratios like, oh, well, I'm going to risk 50 cent, in hopes of making, I don't know, $10 damn a share. They always just have some outlandish shit like that. And that shit just doesn't work. It all works out after the fact when you go back and say, hey, I would have entered here. I would have had my stop loss down here. And look what happened. They always talk, honestly, in hindsight. And that's one of the ways that they have screwed up the retail trading industry so bad and put out so much disinformation that honestly, this is why I don't teach. I won't do mentorship again. I hated my life. It was miserable. It's not me. I'll put out videos to teach or I'll answer questions, but actually teaching, forget that shit. It's just so hard to get people to learn because there's another factor, and I'll talk about that in a moment. Maybe, I don't know. And that is, we don't have enough time for this shit, Todd.
You can't talk about stupidity on the show, James.
Yeah, that or like not putting in any effort to actually learn stuff. But so these YouTube gurus, they've put so much disinformation out in the market that retail traders actually believe this is how you really trade, and it's not. And it's so hard to break that mentality of these traders. And I'm sure I'm talking to a lot of you right now who are just like this. And again, I'm not trying to be rude or disrespectful. Just being honest. And guys, really, I'm not trying to approach you today and just say, hey, you need to forget everything that you've learned and just do it my way. I'm not saying that at all. What I'm saying is you actually need to step back and think, this shit that I learned from XYZ person, whoever it was, it has never worked for me. It ain't working for all these other people who have learned it as well. Maybe this shit ain't correct. And what tends to happen is a lot of people will bring those bad habits, those incorrect trading strategies, and they'll try to integrate it with someone else's system or their strategies. And they think that if I take the best of all these strategies or these systems and I put it together, I'll have this grand omega system. That's not how any of this works at all. Really, I mean, you have your basic chart shit, your moving averages, support and resistances, whatever else. And I'm not even getting to the world of like algos or having proprietary data or anything like that. We're just talking straight technical analysis. So you really honestly just need to step back and perfect scaling in to the best of your ability. Like I can't speak in absolutes and I cannot guarantee anything, but you could probably be one of the worst traders. And if you scale in properly, you'll probably win 80% of your trades. When I say win, I ain't talking about hitting home runs. You might hit some home runs. I don't know. But you probably won't blow up your damn account.
There's been trades that if people were to analyze them, they would be considered a losing trade because maybe my enter price was $10 and I was looking to go long and it drops down to $9.50. I scale in, drops down to $9. I scale in, drops down to $7. I scale in again, and my average is now $8.25 or $8.50, and I cover the whole trade at $8.75. I make I'm green, but it really was a losing trade, and the magic of scaling in protects my account, protects my capital, and it allows me to fight for the next day where I know there's going to be another trade opportunity. I mean, that's the beauty of what we do, is that if there's not a trade available, there's always tomorrow. I mean,
if we're just going to be brutally honest, everybody looks at trading as getting wealthy, making money, living this extravagant life. The truth behind trading is not getting killed every day. That's really how you need to think. And for $19.95 a month, you can subscribe to our new subscription service on how to scale it. No, just kidding.
we're under 6 minutes. There's two thoughts I want to share. One is that there are traders that make a really good living where they pick their entries, they go all in. But what they're also very, very good at, and I think this is a harder way to trade, is they also have no problem and they understand where to cut their losses. And they understand that they can have 2, 3, 4 losses in a row, but the next trade they're going to let run, they're going to make their money. I think that's a harder style to learn. That's why I think taking a smaller position and scaling in, it works for me. It works for my style. And then the second thing I wanted to share with you before we go was people were asking about scaling out. I do scale out, not always, but I do scale out under a couple of different circumstances. In the trade that I showed earlier on the chart, I broke up into fourths and scaled out. And then, or another way, sometimes I'll trade Tesla and I'll get like a $3, $4, $5 point move. What I'll do is I'll put a trailing stop loss in there. So what I'll do is say my entry is at 900 and it's at 905. And I'm going long. I might put a trailing stop for $2 in there. So now if it gets executed, I'm still at $3 profit per share, but Tesla has the ability to run sometimes 15, 20, 25 points. And I can take advantage of that run without having to worry about my trade.
Yeah. So Todd, before we go into the show, I just want to cap on one more thing. And guys, when we're talking about like stop losses in terms of like trading options, whoever on the damn internet on YouTube teaching trading or whatever bullshit that they're doing, who's trying to talk and say, oh yeah, have a 5% stop loss in for options or 10%. You're always going to freaking stop out, and those 10% stop losses turn into 100%, losers, losses overall as they keep accumulating. With options, guys, it is so damn critical to scale in. Yeah, you need to have some place where you're going to stop out, but if you have such a tight stop with options, like your option contracts can move 10% in a blink of an eye. Sometimes just the difference between the spread of the bid and the ask. I mean, it can happen that quickly. So that's why scaling in is so critical. especially when trading options. Like you have to scale in to survive. So Todd, that's all I have today. Sorry, no tickers, but the pre-market still
It's a
sucks.
slow day in the market. I think these are good conversations. I think there's a good conversation to help our members. I know that when I started in the trading business, these were conversations that you and I had one-on-one. And you say you don't like teaching, because actually you're a pretty good teacher, because you've taught me a lot. So hopefully we've given you guys a nugget or two to help you in your trading. And if there's something that's unclear, email Johnny. He'll clear it up for you. Johnny, I love you. I'm just busting your chops.
But like that time we put his cell phone number on YouTube.
That was funny.
Yeah. All right, guys. Hey, trade safe, trade smart. The market is extremely volatile. While the Fed is pushing the market up, we don't know when they're going to be there to not push it up, or when they are, So always be prepared for the unexpected. And really, that's so stupid to even say. I never thought about that. Like, why people would say that? You can't be prepared for the unexpected. Just don't get so heavy in your day trades that it wrecks you if it goes against you. So we appreciate y'all tuning in today. Remember, trade safe, trade smart, and we will catch y'all in the next one.